Hey, welcome back to LR Options, and if you're new to my channel, please consider subscribing. What happened to my trade? Have you ever entered a trade and you just stood there after you entered it, you saw your trade go in the opposite direction, and you're left asking yourself, what happened? What happened to my trade? Well, your best trade entry that you figured out, whether you use your indicators, volume, open interest, everything you could use to figure out what direction you thought the trade was going into, actually went in the opposite direction. And we're going to go over some of the things that hurt your trading, and here are some of them. Hey, welcome back to LR Options, and if you're new here, please consider subscribing. Whatever happened to my trade? Have you ever had this feeling you entered a trade, you thought you had the best entry, you thought you picked the best trade, the best stock for you, you thought you had the best, you saw the best direction, you used your indicators, you felt your indicator was showing you the correct direction, everything looked good, you entered your trade, and all of a sudden you're like, what happened? Okay, and you're trying to figure out why you enter the trade and now all of a sudden the trade goes in the opposite direction. Well, there are a few reasons for this. First of all, not having a strategy. If you don't have a strategy, you won't know when to either continue with a trade or give it time to work out or just exit the trade. So with a strategy, at least you know what to do if the trade is going against you. You can stay in, you can get out, you write out your plan, and if a stock does this, then I will do that. A stock does that, I'll do this. And as part of this strategy is to know your stock and study its past movements. Knowing your stock's pattern is very important. Panicking and closing out of your trade too early is one of the problems we encounter when we don't have a plan. Not giving the trade enough time to work out. We see a pullback and mistaking it for a reversal in a trend, so we rush to close out the trade. And again, this goes hand in hand with not knowing your stock and not studying your stock. Now, yes, if a stock goes below or above a number you had already set down on paper, then yes, of course, you should exit that trade and stick to your rules. And that way you lessen your losses. Okay, so let me take this time to remind you to please subscribe to my channel if you haven't already done so. It helps the channel to grow and will be able to bring you more videos of this type. Choosing the wrong expiration date is another problem that we encounter with our trades. Some trades need more time to profit. Many times we choose a trade with an expiration date that is too soon, a weekly or bi-weekly, when in fact we should have chosen a trade that expires in 3 weeks or longer. So many trades, it's better to choose a longer expiration time, a little bit more ahead in the future, just to give the trade enough time to work out. At least you know you have a few more weeks left in the trade to hopefully see if a profit is able to be made, or if indeed you do need to close out this trade. And if it's a losing trade, you can also cut your losses. Okay, many times we just choose the wrong expiration date for our trades. Some trades need a little bit more time to show a profit and to work themselves out. Many times we choose weekly expirations that are too close to our current position. For instance, instead of choosing an expiration date that's 2 weeks out ahead of us, we're choosing an expiration that's like 4 days coming up in 4 days, coming up in 5 days, when we really should have chosen an expiration a little bit longer, just so we can see if this trade is going to work out. And if it's not, we can close it and lessen our losses, and so forth. Now, many trades also, there is a pullback that you see that occurs. The trade doesn't always go straight up or straight down. You see a pullback, and the pullback is not always an indication, okay, now the trend is reversing and we're going in the opposite side. No, sometimes the pullback is just what it is. It's just correcting itself for a little bit, going in the opposite direction for a bit, a few days, maybe a few hours, and then it just continues back in the direction that you felt that the trade was going in to begin with. So, and that's another reason why you need to have a long enough expiration date. Choose a strike and it with a date that is far ahead into the future to give your trade enough time to work out. So let's look at an example. Let's look at let's see. All right, well, let's look at ExxonMobil Corporation. Okay, so let's say that you choose a trade and you choose it near the 9 moving average indicator line, which is the blue one, because of course you're not going to start your trade over here. You're going to enter your trade as close as possible to the moving indicator. When you see the green candle, as close as possible to the blue or even the yellow moving indicator line when it's an uptrend. And because that's an indication that the trend is going to continue up and you have a better chance of a profit. So so this is the daily chart. So as you can see, there are little pullbacks. You've got green candles, then you've got a little pullback over here, red candle, green candles, a small pullback coming down, green candles, a little pullback, and then green candles. So the little pullbacks are not always, does not always mean now that the trade is going downwards. A lot of times it's just a rest, and then the trade continues to go up. Okay, let's look at another example. This one was ExxonMobil. Let's look at another one. Let's look at Uber. Again, Uber is in a downtrend over here. It's got some pullbacks, and these pullbacks are really strong. So if you wanted to trade the pullback on Uber, that would be fine because they seem to last for a few days. They go on for a few days, and you can make a profit. So you would have to wait till the stock comes down to below the blue indicator, and once it goes above with a green candle, you can enter a call trade, and you can stay in that trade for 2 or 3 days and for a profit. Again, the Uber is in a downtrend. So again, as soon as you see that the stock goes below the blue indicator average, simple moving average line, which is the blue one, that's a 9-day one. You can either enter your trade here, January 14, or you can wait for the next day's confirming candle, which is another red one. You can always wait for a confirming second candle. It confirms the trend. It's going to continue down. So your movement is confirmed, so you can enter your trade, staying there for a few days at a profit. Once you see a green candle, you can exit your trade. Again, you see several green candles. You see one here. You see 3 red candles. You see a green one. You see a confirming green candle, which usually means it's going to do another pullback. Okay, so we're going to stop here right now. Again, thank you for visiting my channel. Please let everyone know what we're doing here at LR Options. Please like, share, comment, and subscribe, and we'll see you next time. Bye bye.